Good morning, Richard Calhoun, real estate broker, 40 years here in Silicon Valley with Creekside Realties. We're here to talk about Silicon Valley's real estate market, and we're talking about week number 3. We'll get back to this slide in a few minutes. The first data slide is looking at the supply and demand. There's two supplies. The first one is the blue line down here in the lower left, and that is the total available inventory. This is an inventory that does not have a contract on it. It's available for a buyer to purchase. This differs in a lot of people's definitions, which others include properties that are on the market but have an underlying contract if the listing agent wants a backup offer. I do not include those because those properties are not available for a buyer to purchase. The second supply line is the gray line up here. That's the number of new listings coming on the market each week. That's your new pickings to look at. And then the flip side is the red line. This is demand side. The yellow horizontal line is the 5-year median. If everything was like the past 5 years, and the 5 years I'm using are 2015, the 5 years just before the pandemic was announced that were complete calendar years, and they were 5 good years. So we're comparing essentially how 2021 and 2022 compare to a base of 5 good years. You have lower inventory, which means it's going to be harder to find properties. You have more demand with normal number of new listings coming on the marketplace. So you're basically going to have a tight marketplace, which is exactly what we have. This is looking at days of unsold inventory. This is the single biggest indicator that we have. The reason I say it's the single biggest indicator, it's because it's the supply demand ratio. It's how quickly would the existing inventory disappear at the existing rate of sales. This is based on the macro data, which is Santa Clara County, San Mateo County, single families, condos, and townhouses based on 1 week. So I look at what the inventory was Friday night. I look at how many homes we sold in the past week and how long would it take to sell the Friday inventory based on the activity during the past week. You can see that's down here around 13 days of unsold inventory. So the past week we sold a lot more houses because there was new inventory, and so we have a very hot marketplace. The 5-year median's way up here at somewhere around 22, 23 days. A balanced marketplace is between 40 and 80. So we're in a superheated marketplace. We've never been this low before. So this is record low inventory, which means the buyers are feeling record high pressure to get a property and having difficulty doing so. Now what we're looking at is how are the buyers responding. We have the sale price to list price distribution for every week. The best week, and it's actually the best month we ever had, was April of 2018. The worst month we ever had was December of 2001. These are the last 22 weeks. The dotted lines are the oldest 6 weeks. The dashed lines are the next oldest 8 weeks. And the solid lines are the most recent 8 weeks, giving us a total of 22 lines of data. And you can see the purple line has changed dramatically between these two arrow points. Normally the lines are fairly parallel to one another, but you can see it dropped dramatically compared to the gray line, which was 2 weeks ago, or the burnt orange line, which was last week. There's been a fair amount of fluctuation in this distribution data, which is sort of surprising, but it's been there. It's been steeper than normal sometimes, and now we have it crossing more than normal. But at the high end, the current data, the purple line is basically very near the top. Through the middle section here, it's actually towards the bottom. And then the bottom section, again, it becomes out at the very near the top, but this is very close together when you get below 100%. So this is pretty meaningless. So basically the way I read this is we started off with a pretty poor week. Then it's only the top 35-40% of the sellers that are doing better than most of the past weeks. But all these weeks are good weeks. So just because I'm saying it's not doing well, it's not doing well compared to the benchmark of the last 22 weeks, but all the last 22 weeks have been to a superb performance week. So it's still doing very well. This is a breakdown of the different components. We're going to start off with inventory, the active listings. The only thing you can really learn that's significant from the active listings is how many are there. And there's only 51.6% of the single family homes that you would expect to have based on the 5-year median for Santa Clara County. There's 80% in San Mateo County, and there's 9.5%, almost 10% more inventory than you'd expect when you flip over to condos and townhouses in Santa Clara County. If you go up to the Bay Cities of San Mateo County, it's actually 80%. So there's almost double the inventory you'd expect there to be. Then once you add in offers, you can pick up the rate of sales, and that gives you the speed of the marketplace. So this is the 5-week DUI numbers. So the 13 that I quoted was based on just the one last week. The last 5 weeks includes the holidays. So there's a lot less buying activity, which causes the days of unsold inventory to go up. Normally, the 5-week is more significant and what I rely on. At this time, the 1 week is probably more indicative of what 2022 is going to be because the past weeks are artificially low, and we know they're artificially low. In reality, it's probably going to settle out in a number between the numbers here, somewhere around 22, 23, and the number of the 1 week around 13. So based on recent history, I'd pick somewhere in the 15 to 18 days of unsold inventory range. A very hot marketplace by any stretch of the imagination. A balanced market is from 40 to 80. In Santa Clara County, single family homes, you're basically at 23. San Mateo County, basically 22. Condos in Santa Clara, 33. And Bay Cities, 24. In order to go further, we need closings, and closings bring in a delay of 5 weeks. So this is reflecting of where the market was at 5 weeks ago, plus another 5 weeks back. So basically from week 6 to week 10 back in time. But 83% of the sellers were getting more than their overbid if they owned a single family home in Santa Clara County, 73 in San Mateo County. Dropping down to condos, it's 70% for Santa Clara, 55 for the Bay Cities. Now, the magnitude of overbidding tells you how aggressive the buyers are being, and they're getting pretty aggressive. The 113% for overbidding in Santa Clara County is probably a record high. The 111% in San Mateo is not a record high, but close. Condos and townhouses tend to be more stable, and they're at 105 and 103%. And it is interesting to see that San Mateo County condos and townhouses, or the Bay Cities, is fairly strong when you look at the amount of DUI, the amount of frequency of overbidding, and the magnitude of overbidding. But yet, when you look at the inventory level, it would be a cool marketplace. And when you come over here, and we'll jump ahead, you look at the sale price. It's very cool. Prices are down from last year. Prices currently in San Mateo, Bay Cities condos are less expensive than they were during the calendar year of 2020. This column here, the very last column of data labeled peak, is inaccurate. So ignore that. But the data in this week data is accurate. So the current appreciation for all of Santa Clara County is up 21.5%. San Mateo County is up 11%. Santa Clara condos and townhouses are up 5%. And as I've already said, condos in the Bay Cities is actually down slightly. I would actually call it flat. And though that appreciation mark is based on the entire calendar year of 2020, I will probably upgrade to 2021 next week. This is coming back to an article that I talked about last week, and I just wanted to point out a couple additional things. One is I don't think the interest rates got down to 2.65% in the Bay Area for any significant period of time. I think 2 3/4 and more likely 2 7/8 was very doable for any period of time. So what that does is it drops the increase from 8% impact on pricing to a 6% impact on pricing. But the other component that I want to throw out there that I don't think I mentioned last week was even that 6% is probably artificially high because this assumes only a 20% down payment. Some buyers are coming in with 25%, some are coming in with 50% down, and some are coming in with 100%. So the overall negative impact on pricing is going to be less than 6%. For argument's sake, I would maybe pick 5%. So there's a downward pressure point of about 5% because of the recent interest rate hike. But if I'm expecting a 12% price increase, we're still going to end up with a 7% price increase, which is very substantial for real estate marketplace. This week, I wanted to talk about this article that just came out this morning. That's why I had last week's to talk about as a placeholder. And if you have any articles you want me to look at and analyze, please just send me an email ahead of time and I'll look look into it, and a link or the copy of the article. So you can see this was posted today at 6 o'clock in the morning. And it's in recent weeks, only 700 single family homes were up for sale in San Mateo County and Santa Clara County. So we'll be looking at that in just a second. Is that accurate? Why, where they're coming from and things like that. But they're claiming there were 700 homes in recent weeks for sale in the two counties. Down here, sellers have been reluctant to put their home on the marketplace for several reasons. It'd be interesting to see what those reasons are and whether the data supports that. And then the third one that I want to discuss is, by normal standards, a 3-month supply of homes is normal. That would be 90 days of unsold inventory. So let's go back and see what my data actually shows. This shows the active inventory that's available for buyers to walk in and purchase Santa Clara County and San Mateo County. It also is single family home, like the article said, but I also throw in condos and townhouses. So since I'm throwing in condos and townhouses, I should be, something like 30% higher than the newspaper articles, where you'd expect them to say if condos and townhouses make up about a third of the marketplace. Well, where are we? Well, in recent weeks, the last 3 weeks, we've been between 500 and about 700 homes for sale. That isn't 700 single family homes, because I'm adding condos and townhouses. And then if we go back into historical weeks, like week 4 and 5, we're under 500. So I would not feel comfortable saying in the last recent weeks there's 700 single family homes in the both counties for sale. I think where that number is coming from is, I think they're including the properties that are included in escrow that are seeking backup offers. And I think they're also including condos and townhouses without being clear. What is the definition they're using for single family homes? Mine is a single family home, by itself, no major HOA associated with it and that kind of stuff. Basically, your single family detached home, although, a duet home that's by itself, like on Young Circle, I would count that as a single family, even though technically it's a condo. So it probably would count as a condo because of the legal way they own the ownership. So you have to understand what the definitions are and where people are coming up with their numbers from. And more importantly, is to be consistent, because if you listen to one agent that uses one number one time for an article and another one, it gets completely confusing to the reader. So the next comment was, what is normal days of unsold inventory? They said 3 months. That would be 90 days. I define in our marketplace 40 to 80 days to be a normal marketplace, and anything under 40 to be a red hot seller's marketplace. So to say that up here at 90 days, about 90, so that'd be plus and minus, ice cold buyer's marketplace. And again, I think that 3 months comes from a statewide number, not from a Bay Area number. So again, it's important to know what people's definitions are. And with that, I'll pause to see if there's any questions as I go over the root URLs. The green is what I call my base URL. You add 2022 to it, the year, to get to the live presentation Saturday morning at 9. You add H for handout, and then 2022-01-22, and you would get today's handout. It was posted about 8:42 this morning. Past archives is just the base URL, and for a specific presentation, you add in the 2022-01-22. That will be up most likely later today. If you go back to 21, you have to use last year's URL. Anyone have any questions? Not seeing any questions, I'll move on. So now we look at the breakdown. We're looking at the different micro market areas in single family homes. We start off with Santa Clara County and we finish with San Mateo County. The reason I have RDC in here, for full disclosure, is I don't include some areas like Pascadera, La Honda, that have very few transactions that would skew the data for the bulk of the county. So I intentionally leave those areas out. Santa Clara County has 100% of the county covered, even though it may not be reported in the micro market area. So here's days of unsold inventory. How long would it take to sell the existing inventory at the existing rate of sales? You can see we have some blue. I believe this is the first time we've had blue. I don't believe I had this table available right at the beginning of the pandemic. So this is the first time blue has shown up on days of unsold inventory, but most of the areas are pretty aggressive. And again, this is going to be your 5-week numbers. So they're higher than you would expect because it is including the impact from Christmas and New Year's. So now we look at the frequency of overbidding in 2 areas. Cupertino, Sunnyvale, as well as Redwood Shores and Foster City, are at 100%. And you can't get over 100%. You can't have 101% of your sellers getting their asking price. So that's the absolute highest and best performance the sellers could possibly hope for. Every single seller that closed in the last 5 weeks got more than their asking price in those geographical areas. You can see the bulk of Santa Clara County is in around 80-85%. If you go to San Mateo County, it's a little bit lower. There's some 66s in there. There's some low 80s, so definitely a little bit cooler. You can see countywide for Santa Clara, 83%. For San Mateo, countywide, 73%. So a 10% point difference. Condos and townhouses in both counties, completely different picture, quite a bit lower. These three geographical areas are essentially the same, which is why the color is the same. When I first saw that, I thought it was a data error until I realized the data numbers, the raw data was exactly the same number. So of course the color is the same. Then you move over to the magnitude. This is how much above the seller's asking price or the buyer's willing to go. And you can see countywide, it's 13% above the asking price. Cupertino Sunnyvale takes away by a long way at 126%. The next highest is probably a lot. Milpitas, Berryessa, Santa Teresa, Blossom Valley at 114%. So that's a pretty big drop. Oh, here's Campbell, Santa Clara, Willow Glen, Cambrian at 115. That would actually be next. And then there's a couple up in San Mateo County here at 114%. So they start coming in really thick and fast, right around 114%. But Cupertino, Sunnyvale sticking out at 126%, 12% higher sort of than where the next highest ones are grouping. And then the condo and townhouse market quite a bit slower at 105% plus or minus a little bit. Then we're flipping over here. Color is not related to the heat of the marketplace or how hot the marketplace is, but is simply an indication of the median price compared to Redwood City, which almost always is the median price. So Redwood City, so is at just under 2 million, and it's white because that's basically the median price. You jump up to the Bay Cities and it's at 2.2%. So it's got a little bit of pink. Areas that are blue are below the median, and areas that are deeper red are much higher above. Condos and townhouses, neutral is set for the most expensive townhouse area, and at 117, it's not the same white as the houses, and there's only a few micro market areas, so I didn't want to throw in blue and red. And besides, the numbers for the median are so close together. These blue colors, 4 out of 6 are all the same blue. I mean, you've gone from 70% to 75% to 77% to 80%. There's no difference in that really. And that's not percent, that's 100,000. So most of the condos median price for most of the geographical areas is right around 700,000. It's between 700 and 800,000. That's a pretty close price range. This again is looking at the map or graph that we already looked at. It's simply the number of new listings. The blue line is the current data. The yellow line is the 5-year median. It basically tells you you're right at the 5-year median. The number of new sellers coming on the marketplace is exactly what you'd expect it to be. Here's the total inventory. If you had the expected number of sellers coming on the market, how is the inventory so low? Well, two things happen with supply. It's new supply coming in the market as well as the demand taking the supply away. And that's the answer. Here's your demand. Your demand has been above your 5-year median and continues to be above the 5-year median. The only reason I maintain that it was not above in the first 2 weeks this year, January 1st happened on a Saturday, the start of my week. So January 1st this year was the beginning of the week, and my week number 1 went from the 1st through the 7th. Last year, it would have been different. So last year, the first week was January 2nd through January 8th. So it was only 1 day different. But in the 5-year median, probably one of them was January 6th through January 12th. That makes a huge difference in the first couple weeks. So last year didn't matter very much, but 2021 isn't in this data. This data was 2015 through 2019. So I guess what I really should do is look at the data for January of the different years. 2019, the Saturday was January 5th. In 2018, it was January the 6th. In the 17th, it was January the 7th. January 16th, it was back to the 2nd. And it was January 3rd on the 15th. So 3 of the years was pretty far out. It was far into the new year. You're having sales that are being recorded, no one's going to do an offer, or very few people are going to get an offer accepted on January 1st. So I lost Saturday and Sunday probably. The way the market works, you end up losing that whole week. So bottom line is the number of sales this year is lagging behind the 5-year median because the 3 of those 5 years, it was a substantially higher number in January for the start of the year. So it was this date is earlier in the calendar as far as date. Here's the inventory, days of unsold inventory over time. You can see the huge impact for Christmas. There was less impact this year than there was last year, and less impact last year than there was the year before. Every year since COVID, the impact of holidays has been less significant. One of the things while we're talking about holidays is the 49ers are in the playoffs, and it's not a holiday, but it's something that takes some portion of the population away from looking at real estate. So this weekend will be less active than it would have been had the 49ers not made the playoffs. The increase that we're seeing now is going to be dampened a little bit compared to what it would have been had the 49ers not made it. So I'm not saying that I don't want the 49ers to make it. I'm just reporting we may see next week a little downturn in the activity level compared to the 5-year median because of the 49ers being in the playoffs. The other takeaway is that we've rolled over. It looks like next week the DUI will be significantly lower. And we were sort of seeing that earlier today where the 5-week median was around 23 and the 1-week median was around 13. Those two numbers are going to converge and we'll see somewhere around 15 or 18 days unsold inventory next week. This is showing the geographical distribution of the days of unsold inventory. The redder the color, the hotter the marketplace. We do have the blue in the expensive areas of San Mateo County here at 85 days of unsold inventory. So that's worth noting. This is the frequency of overbidding over time. You can see that we finished up the end of the year somewhere around 75%. We're starting this year at 80%. So we jumped up right over the holidays. This is lags behind again though. So remember, I need sale price to do the sale price to list price ratio. So this is a 5-week lag time. This is stuff that was happening essentially at the beginning part of December before the holidays. Here's your overbidding frequency over time. It's noteworthy here. The red line on the right-hand side of the graph at the top, the red line in Santa Clara County is going up fairly significantly the last several days. San Mateo County is going in the opposite direction, going down. The condo townhouse market is more stable and drifting down. Here's the frequency of overbidding. The redder the color, the more the overbidding is. It gets saturated red at 95%. And 2 areas, Cupertino, Sunnyvale, as well as Foster City, Redwood Shores, got 100%. You can't do better than 100%, but they're at 100%. The worst area is Menlo Park, Atherton, Woodside, Portola Valley at 36% of the sellers getting more than their asking price. The bulk of the area is between 66% and 85%. Now we're shifting from frequency of overbidding to magnitude of overbidding. So this is how much are buyers overbidding. And to the left of the horizontal or the vertical purple line is 2022. And you can see we're somewhere right now around 10% above the asking price. So on average, when you put everything in the blender, both types of properties, both counties, blend it up, the macro data, look at just 1 week, sellers were getting on average about 109.8% of their asking price. The vertical line this puts a discontinuity between 2021 data to the right and 2022 data to the left. In 2021, you have to subtract 1. So the first data point there is not week 5, but is really week number 4. And that's to give us vertical separation. So Excel does not draw a connection between those 2 points. This is the magnitude of overbidding over time. Here, San Mateo County is going up like Santa Clara County, but did not share with Santa Clara County's significant change right about the first of the year. But again, remember the first of the year is going back 35 days. So right around December the 1st, the amount of overbidding went up fairly significantly. And it went from 111% overbid to 113% overbid in just a few short days. This is the overbidding plotted out. You can see Cupertino, Sunnyvale at the highest I've seen or remember seeing 126% of the overbidding. Then you jumped up to Campbell, Cambrian, Willow Glen, Santa Clara at 116%, 115%. Then there's a whole bunch right at 114%, and then it comes in pretty solidly after that. Here's the sale price to list price distribution again. It's a little bit hard to see, but the big takeaway is the steepness of this line drop here. So the top part of the purple line, the current line, is doing very well compared to the last 22 weeks, but the bottom portion of the line is doing fairly poorly. Now, when I say fairly poorly, it's fairly poorly compared to just those 22 weeks. All 22 of the weeks is pretty good, so it's still a fairly good week. Here you can see it a little bit more, how the purple comes down and is towards the bottom end of the last 12 weeks. So it's for the good, most of this, it's about the fourth worst week out of 12. But all 12 weeks are good weeks, so it's nothing to get concerned about. Here's the pricing over time. You can see San Mateo County with less data point is a little bit more bouncy than Santa Clara County. Santa Clara County is also more stable because the high end isn't as high as it is in San Mateo County. And then the condos and townhouses likewise do a lot more stable. They tend to be like the slow and steady versus single family homes that tend to be rapid appreciation, overshoot, mild correction, then just stable, rapid appreciation, mild overshoot, and then some stability. Here is your sold price areas. Here, it's not the degree of how hot the market is. It's just a matter of what the price range is. So the red areas are the more expensive areas. The bluer the color, the more affordable it is. Redwood City is almost always the median. The colors are assigned based on the median price. The number to the left of the median price is the lowest 10 percentile in that geographical area. The number to the right is the 90 percentile, the highest 10 percentile. 80% of the homes in that area are between those two numbers. Now we're looking at appreciation. This is looking at 5-year sale price number, and I'm comparing it to the 2020 pricing for the entire calendar year. So if you look at these numbers currently, you've got 40% appreciation here for South County. The lowest number I'm seeing is here at in a micro market area is 17%. Counties in both cases are significantly lower than their components. In Santa Clara County, the median is 21%, but there isn't a single area that has had less than 17% appreciation. The vast majority are 25 to 32, and in one case, almost 40% appreciation. How is that possible? There's a shift towards more affordable areas, which keeps the median price of what's selling artificially low. So the numbers of the micro market area percent appreciation is more accurate of what happened to particular property values in those micro market areas. The same thing is noticeable in San Mateo County. Here, 11% is the county-wide median, but the lowest area is 14.7, with a lot of them right there, 15, 16%. So the county is appreciated less than all its components, which doesn't make sense unless you all of a sudden increase the market share of the more affordable areas. The yellow highlights are where the high peak happened, and the high peaks are over here. So again, you can come back here and you can see your high peaks are 27 to 39%, but yet your county is at 24. Nothing wrong with the data. It's just market share changes that are right now favoring the lower end, which is artificially keeping the median price for the county artificially low. Here I'm going to turn on my magnifying glass and we're going to look at historical data. Now you're seeing I'm looking at January data, and January data is normally not gathered until February the 5th because it's data through February the 4th. And that's because I use 35 days of data starting on the 1st of January. If you look at the median asking price, it's an all-time record high, probably, at least it's a record high for the month of January at $1.8 million. That's not what's selling. That's just list price of what's on the marketplace. That doesn't necessarily reflect what's selling. In fact, we can jump down. It's a little, you can see you're at 1.665. So there's a drop of $135,000. And I used to have a consumer absolutely jumping up and down at me, telling me, look, sellers are on average taking $135,000 hit off their asking price. No, they're two different groups of properties. One's on the market. If more expensive homes stay on the market for a longer period of time because there's been a market shift interest to the lower end price of homes, the median of what's available is going to be higher than the median of what's selling. The big takeaway is the highlighted line. So let's focus on those. The inventory, 277. That's by far a record low, but will it be a record low by the time we get to February I'm not so sure it will be. 450, I'm off by about 135. I'm sorry, I'm off by about 165. I think we have a very decent chance of getting there. It'll be close. That's sort of the area I'd almost expect to hit in. We only have 2 weeks to get there, but I think we may pull it off. Going down to the offers accepted, you have average and median days on the market, and median is more significant than average. So we'll look at the median of 7. That's a record low. Do I expect it to shift at all? Not really. I would almost expect it to go down a little bit, but then, it can't go much lower than 7. Basically, that's half the sellers are selling their home as soon as they put the house on the marketplace, because most sellers won't accept an offer right away, but want to go through a weekend. And by the time you expose the property, go through a weekend, look at offers, report it to the MLS, you're at 7 days. Your days of unsold inventory, I do expect this number to continue to drop, as evidenced by our 1 week number, which is down around 13. It's already a record low, so I expect it to be a record low come February. And it's not, last year was at 22. I'm pretty confident we'll be below the 22. That, we're essentially a tie, and we're not far off of 2018 pricing. But by the time you leap forward 2 more weeks, I suspect we'll be at a record low. Number of offers accepted, 427 is a record low number, but this number is going to increase because there's going to be a lot more offers accepted over the next couple of weeks as we get further away from New Year's and stuff. Will we catch 532? Probably will. Typical size. Then finally, down at the bottom of this table, we get to the closings. And with the closings, you have overbid, 113%. That's a record high. There's no real upward or downward pressure. There's probably going to be some down pressure on it, because with the 5-week lag, we're actually getting closer to New Year's on this 5-week lagging indicator, but I don't think it's going to drop 5 points and catch the 108.5. The frequency of overbidding will also drop a little bit, but I don't think it's going to get anywhere close to 73. So I think both of these are going to finish out at a record high. And then the median price of 1665, I need to get a record high median price for Santa Clara County, because I think that may be it. At least it's very close, if not. And then the number of closings, that number will probably drop, because as we report data on February the 5th, gathered on the 4th, and go back 5 weeks, we're close and using a lot of days from New Year's and Christmas, et cetera. So that number very well would likely to drop. And with that, this slide is essentially the same thing, but I'm comparing December's data. So I took the data on January the 5th. So here's where you're comparing apples and apples. And you can see that inventory was an all-time record low of 182. This is single family homes in Santa Clara County only. So even if you added, say, 3/4 of that for condos, that's somewhere around 120, that call at 300. And then if you say condos and townhouses are about 50% of single family, that you're up to about 450. And then if you say that the hottest marketplace is the single family in Santa Clara County, it's a little bit higher than 450. Maybe you're up at 600. You're not at 700. And then we went through that already a different way using a different set of numbers. So that's it. Here's the URLs again, and I'll pause to see if there's any questions. Not seeing or hearing any questions. Everyone have a good week, and see you next week.